Hey guys, JC here with Structure Lab. Most traders are guessing where and when to trade based on what they see on their charts. Structure Lab measures the behaviors hidden beneath price action and turns it into probabilities you can actually use, helping you find better entries, smarter exits, and avoid low probability trades entirely. In today's video, I'm going to show you how I data mine market structure and use those statistics to make high probability trading decisions. Some of you are going to see this and immediately recognize the power of what I'm showing you. Some of you are going to see this and think, wow, that looks complicated. But the truth is, it's actually not that hard. It does take a little time to learn how to do this, but once you do, you'll wonder how you ever traded without it. So I'll do my best to keep this simple. Let's start by looking at the last 6 months of price action on the Euro USD. If you're even a little familiar with market structure concepts, you'll be able to follow along here. The first thing that I look to do is identify my swing structure. Now with our swing structure mapped, let's next map the internal structure that make up each swing leg. Now let's simplify the look of all this. We'll just remove the lines and keep the dots. Now if this doesn't look like the way all the YouTube gurus have been showing you to map market structure, you're right. This way is better because it removes the randomness and helps you identify each swing leg based on the smaller internal structure that they're made up of. Because now we're looking at how long the market behaved a certain way. So when we data mine all this structure in the next step, we can measure that behavior and see how far each of these swing legs go, how long they last, how much participation was in each one, how much volume was involved, and so on. And by measuring these swing legs and all the internal structure that build them, we can generate statistics on market behavior. And once we have statistics, we unlock probabilities that we can use to help us make higher probability decisions based on how the market likes to behave under different conditions. And this is a game changer because we're not just measuring price, we're measuring behavior, and behavior repeats. All right, so how do we data mine this? Are we talking spreadsheets and math? Well, before now, that would have been the only way. But because that's not efficient or realistic for most traders, I built Structure Lab. Inside, you can select your favorite Forex and futures instruments and map your structure simply by drag and drop tags on one or multiple time frames. Not too hard, right? Then we hit save, and all the heavy lifting, all the data mining is done for you behind the scenes so that when you click on the Stats tab, you can see a bunch of cool statistics for any time frame, which is going to reveal unique probabilities that were hidden beneath your structure. And you can use these probabilities to make smarter trades no matter what your strategy is. Probabilities like how far price moves in each direction, how long those moves last, when to expect structure to break, where and when to expect liquidity sweeps, what session, what day, even what time of day each piece of structure is likely to begin or end, along with how far price likes to pull back or retrace. All right, let's pause for some real talk. As you're looking at all this data, I know you might be thinking, wow, this is amazing, but it looks complex. And I get that. This kind of data can look intimidating at first, but in just a few short hours, anyone can learn to read and understand these statistics, especially with the personalized onboarding and training that comes with the platform. And it gets even easier because we also sync this data directly into TradingView right onto your charts, which is going to give you a heads-up display of the stats for each type of structure. And this data helps us make higher probability decisions on our directional bias, entries, exits, all of it. It even plots predictive levels for both swing and internal structure that make trading less stressful because you can lean on real data instead of gut feelings. And once your decisions are guided by data, you'll reduce your uncertainty about having absolutely no idea which direction the market is likely to move, which means more confidence, less stress, fewer mistakes, and better trading performance. So, how do we apply all of this data to our trading to make higher probability trading decisions? Well, I'm going to walk you through how I apply these statistics to a live market and give you my forecast. So back over here to our Euro USD example, you can see that this is our current swing range. This was our last swing break of structure, making this our current swing low. And it is a strong low as it led to the break of this previous high. Now, any market structure trader will easily be able to tell you that we are in the pullback phase of this swing structure. Price is pulling back into the swing. And herein lies the biggest challenge for market structure traders, which is trying to determine if this pullback is over and price is ready to resume higher and take out the previous swing high, or if there is still more room to the downside for this pullback to continue lower. And without any data to answer those two questions, you're only relying on your gut feelings, which is going to increase your uncertainty, decrease your confidence, and increase the likelihood that you make mistakes. So let me walk you through how I'm going to apply these stats for this forecast. We'll turn on our internal structure so that we can see our latest internal range, and we'll see what the data tells us. We'll come over here to our Structure Lab dashboard. I'm going to click the TradingView Sync button and head back over to TradingView. Once in TradingView, I'm going to open the Structure Lab indicator. I'm going to scroll down to this area where it says sync code, and I'm going to paste the sync code and hit OK. I'll now turn the indicator on, and you can see that it displays this heads up stats table that's going to tell us everything that we need to know. So let's walk through this. First up is our swing structure. We can see that 80% of the time, this type of swing structure tends to move an average of 3.14%. So if we measure from the top of our swing high down to the lowest low of that internal pullback, we can see that it's already moved 3.16%. So in terms of distance, it's already there, kind of making the case for price to begin pushing higher to take out this previous high. However, before we start framing long trades, let's take a look at our internal statistics and see what those might tell us. We can see that this type of internal structure, 80% of the time, tends to move 1.2%. So measuring from the top of this last internal high down to this low, you can see it's already moved 1.29%. However, if we look at our break of structure statistic, we can see that 69% of the time, this high is going to break these lows. Those are strong probabilities to have on your side. Now, knowing that, what can we expect? Here's my forecast. I expect that sometime in the next 24 to 48 hours, and I'll show you how we can fine-tune that even further, for this type of internal structure, we can scroll down and we can see that the London session has the highest likelihood that this type of structure will start and end. Not a big surprise there since we're trading the Euro USD. However, when we look at the day, we can see that Wednesday is the most likely day of the week for this structure to terminate and for the new structure to begin. We can dial that in even further and look at the time, and we can see right off the bat that 1300 UTC time or 1 p.m. UTC time is the most likely time for this structure to end. So back to our forecast, what do I predict? I see price pushing higher in the London session to take out the liquidity behind these descending highs and this fractal high right there before rolling over and pushing sharply lower, taking out the liquidity behind these ascending lows, the liquidity behind these equal lows, and ultimately breaking this low, which it has a 69% probability of doing. So to the downside, where can we expect this to move? Well, we'll come into our indicator here, and I want to turn on these predictive levels for both internal and for swing. So we'll do that now. And you can see that it automatically plots these levels on the chart based on the high that it's being measured from, which in this case is the internal high for these levels and the swing high for these levels. So what I'm really drawn to are stacked levels, or areas that kind of levels that kind of overlap with each other. So if we know that this low has a 69% chance of breaking, the very next stop below that, based on our statistics, would be this level right here, where we've got a stack of 2 internal levels and 1 swing level. And then, further down we have this right here, which is a bit of a stack of both the swing level and then this last internal level. So That's my forecast for the Euro USD for the remainder of the week. And we'll see how this plays out over the next 24 to 48 hours. But this is how you data mine market structure and apply the probabilities from those statistics to your trading to make higher probability decisions, reduce your stress, and increase your trading performance. All right, that's it for this walkthrough. So here's the question. Are you trading based on what you see or what's actually driving price? Are you still reacting to price, getting caught on the wrong side too often, and second guessing your analysis? If you want to measure the behavior beneath your chart, Structure Lab's built for that. Links in the description.